the funds had modest gains across the board at the end of the third quarter. Starting with the equity funds, the Caribbean Growth Fund was up 3% and the World Growth Fund was up almost 5%. So in those funds, the global shares gained between 4 and 9%, while Caribbean shares declined for the most part. In the US, factors like a strong US economy and consumer and excitement on AI and the resulting large capital expenditure happening there, as well as an anticipated Federal Reserve rate cut, helped to support US equity prices. In international stocks like those in Japan and Europe, there were strong gains in local currency terms, but international currencies fell about 1% against the US dollar, so returns converted to US dollars were more modest. Emerging market stocks were strong another quarter. In China, trade talk progress and good valuations helped to abate some of the negative sentiment we saw before on Chinese stocks. And stocks in other emerging markets also showed strength as the capital expenditure cycle fueled by AI and the data center developments provided an uplift to commodity and mining stocks. In all, the Fortress Global Funds gained between 4% and 13%. Emerging markets funds had the strongest performance this quarter. In contrast to global markets, the Caribbean was a weak spot for the fund this quarter. Some of the fund's larger holdings in Trinidad declined, reversing the strength we saw in the previous quarter. So notable movements were in Guardian Holdings, which was down 14%, and Massey Holdings, which was down 9%. Switching to bonds, the Caribbean High Interest Fund gained about 1.3%, and the World Fixed Income Fund gained about 1.6%. Coupon income and the positive price impact of lower interest rates combined to provide a modest return in the bond funds this quarter. During the quarter, there were signs of a softer labor market in the U.S. and some political pressure to cut rates increased the expectations for an interest rate cut. In September, the U.S. Federal Reserve cut rates by 25 basis points, but the move was fully priced in by the market. At the end of the quarter, the U.S. Treasury yields fell across the curve, shorter yields fell more than longer yields, and U.S. corporate spreads tightened a bit. And that's it for me this week.